Hey there, traders. Todd Gordon of Trading Analysis. This is a free video update. Don't mind my voice. Allergies killing me this time of year, and so are interest rates. So let's get into it. Not killing us. We're fine. We're gonna have to adapt. There was a saying that I posted. I'm gonna call it an audible right now. That I posted for members yesterday from the late great Jimmy Buffett, which is, I can't change the direction of the wind, but I can adjust my sails to always reach my destination. So what does that mean? Well, you can't fight the market, and in order to safely reach your destination of journey of return, alpha, growing your portfolio, you need to listen to what the market's telling you, adjust accordingly, and get to where you want to go in the safest manner possible. So there's so much going on in the macro front right now with interest rates, inflation. We just got another strong employment price data point this morning. We have the Fed coming up. We're now fully in earnings season. There's a lot going on here. So let me take you through what I think is happening right now. So what we're going to cover is we're going to talk about those yields quick to start. Last video I left you with, we were talking about the value growth ratio and yields. I'm going to update you on that. We're going to talk about the NASDAQ, show you where the technical position is. We have a hedge on in the options market. I'll show you that. I'm going to short Coinbase, which is related to the value growth ratio as well as yields. I'm going to do that trade for you live. And I also just bought Cannabis growth on the news that Cannabis coming off Schedule 1 is imminent. So there's a lot going on right now. Sorry. All right, let's dive in here. Okay. So let me get myself organized and screen number 2. Okay, so yields to start. This is the 10-year yield daily chart. 786 is what I call the retracement of last resort. If you break above the 786 retracement, it's usually you're going to go to probably to new highs. So this is the 78% of this. We've tried 3 times. Here we go again. We're bouncing up to 4.68. We get off the daily down to a 1 hour. We've been messing around this 4.7 area for a while, but with that data this morning, we're coming back at it again. So that's going to be pressuring the stock market as the yields are pushing up as a result of persistent inflation. And the other thing that was significant this morning is, for the first time, the September rate cut just got taken off the table and pushed back to November. Do you think the Fed's going to cut during a presidential election? I don't think so. So we're coming on no interest rate cuts, and this is what we've been saying all year. So the rotation that's happening is very much related to, again, the economic data that's driving rates higher. 10-year yields are at 4.7. So that's fine, right? I think it's a good thing that interest rates, the 4.7% 10-year yield, goes to 5%. Because you know why? That's going to leave the difference between the 10-year yield and the 2-year yield, the so-called yield curve, much less inverted. And I think, the algos, the headline readers say, oh man, rates are going up, sell stocks. But I think when cooler heads prevail, they realize the yield curve's flattening. That's good. But that's what we have to deal with now, okay? So yields are pushing up, driving stocks, and specifically growth stocks, lower, which is what we saw in 22 and 21, 22, and early parts of 23. And last time I was with you, I showed you this right here. Okay. So what we're looking at here is, again, U.S. 10-year yields in orange, and from 21, 22, and into 23, yields are going up. And generally, that is going to correlate to the value growth ratio. So as yields are going down, value is underperforming growth, growth's outperforming value. The two bounce together very smartly right into the end of 22, beginning of 23. Growth trade said, peace out, enough of that. Growth started to outperformed value, value underperformed growth as interest rates were continue to push up. Okay, now this is the most recent move up in the U.S. 10-year yields from, you can see on the left scale, from like 3.9 up to here we are now at 4.7. So what's happening is the value growth ratio is holding this double or triple bottom here. Are we going to start to see value outperform growth? Even more pronounced is how far off the mid-cap value growth ratio is as we're holding this low. So, as we look at the rotations here, we can see that Vanguard Value, this guy right here, is moving into favor as Vanguard Growth is moving out of favor. Okay, the mid-cap 400, the mid-caps are moving in to favor, rotating up and in, as mid-cap growths are rotating down and out. Okay, this is the weekly RRG, this is the monthly, and what's concerning but also reassuring at the same time is all this to do, this move up in rates, this bounce in value growth, all it's done on the monthly growth ETF is to just sort of bend it over a little bit, drop it for the last couple months as the Vanguard Value is still rotating out of favor in the monthly. We could just be doing sort of a little bit of a rotation, and then maybe it hooks back up. Maybe over on the weekly, we don't get the full rotation from weekly weakening into weekly lagging. Maybe we get the hook up, and you can certainly be assured that the interest rate, well, I don't want to say that. Likely that would be a result of interest rates moving back down. Then the value growth ratio can drop. Maybe we can drop this triple bottom. Okay, it's so key right now how much interest rates, 10-2 curve, real interest rates, which inflation adjusted, it plays into it, right? And it really just goes back to this chart right here, which, again, the 10-year yield, the 786 is so important. Okay, so getting off of that, let's go take a look at the NASDAQ. Now, here's my count in the NASDAQ. It's a little dicey. I don't love the wave count, but we're going to have to work with it for now. So coming out of the Q4 of 2023 in the NASDAQ, we're looking at a good, decent, no, it's not even good. It's ugly. It's just ugly. Ugly 5-wave move up, and I'm wondering if we're doing ABCX and then ABC down. I have a Q put hedge on with our members at Trading Analysis for this little move right here. Okay, and I'll even show you the position. So if we go over to the Qs, here it is. So it's a May 3, 425, 440, 425, 420 put spread. Wow, I put that trade on yesterday. Maybe that was an omen for Cannabis coming off the Schedule 1 with the 420 target on the Qs. Okay, I'm showing it to you in the NDX 100, but that's what we're looking at on the downside. Okay, so really that little hedge is just getting down the equivalent QQQ to the NDX. There's no equal comparison like the S&P, SPY, and the SPX. So here's a little hack for you. You just overlay them, and then you just wait for your slow data to pop in, and there you go. Right, so looking on the left scale, I'm trying to get from 425 down to 420 right here, and it's highlighted with that. So really just looking for the A-wave move down, and we'll see with earnings coming up if it's going to drop further, okay? Now, related to everything I just said, and it may seem like a stretch, but crypto having whatever the hell is has really not given Bitcoin much of a bid. And I had some Bitcoin ETF in our stock desk, and I cut it. We got stopped, and I'm wondering if Bitcoin is doing on the daily I guess it'd be it's actually considered a running flat. So it'd be 3 down, 3 up to a lower high. And then I'm wondering if this is 1, 2, 3, 4, 5, wave 4 moving into some lower wave 4 V2 support areas here, down around the 57 to maybe 50 area. Okay, so that would certainly be nasty, but it wouldn't even threaten wave count invalidation, which is going to be at the wave 1 high, which would be right here. I'm going to label it as such, type wave count invalidation, and that's all the way down to 44.9. That's actually crazy how much further down that is. Okay, so you know, I also have, I started to overlay, you know, U.S. yields and U.S. 10-year treasuries on top of Bitcoin, and just take my word for it, there is some degree of correlation. So as those yields are pushing up, it's pressuring the growth trade lower, which now includes crypto. I think crypto is the 5th asset class. So fixed income, commodities, currencies, equities, and crypto. And it's really trading as an equity, I think. And, you know, certainly higher U.S. rates, higher FX market by the dollar, lower gold, all of that is bad for the stock market. And notice what I said, lower gold is bad for the stock market. Higher gold is good for the stock market. We'll talk about that another time. Not a lot of people understand that, but that's just the way the macro markets are right now. All right, okay, so that means if Bitcoin goes lower, Coinbase is coming up on earnings on, I believe it's May 3rd. All right, so if we look at the daily on Coinbase, here's the wave count I'm looking at. Considering what we just saw in Bitcoin, I'm thinking we have a wave 4 drop to come. Now, there's two very simple wave 4 projections. You do a wave 4v2 Fib projection, so percent distance traveled in 2 compared to 4. Wave 2 was, I believe, a 47% drop. 61% of that would be right here at about 33%, and then 100% would be another 46% drop. Okay, and then you also do a wave 4v3 price retracement. So you do wave 3 down in 4, real simple. So this is a possible support zone that may hold 190 to 185, but I don't think so. The green guys are more typical for a wave 4 correction. And if you consider what I said about U.S. yields, stronger dollar, rotation into value, Bitcoin probably goes lower, which will drive Coinbase lower. So here's what I have set up to try to get into this wave 4 support zone for earnings. Now, if we look at the option strikes, we have 176% annualized volatility for the options that expire May 3rd, Friday. So we have a lot of vol, and it was actually quite a bit in the back month there, or back week, 10 days out for next week, 124, then it drops down. So, you know, the standard deviation's up here. We're trading 203. The -1 standard deviation for earnings is $22. So, you know, we're talking 180 as the -1 standard deviation. And everything I'm seeing on expectations for Coinbase is solid. So the -1 standard deviation is just on top of that blue clustering of wave 4 support. So if this thing gets nasty, I'm wondering if we get below the -1 standard deviation down into this more typical wave 4 support zone. So I'm going to take a flyer here. So 268. So if I do a 10 lot, 2,600 to make 17,000, I don't need to risk that much. What does an 8 lot look like? I'll risk $2,000, 21 to make 13,856. That's fine. 268 midpoint. Let's see if we can get filled at 272. No, these guys. 271. No. Working. Cancel replace. 274. Oh, come on. 277. There we go. 277. All right, done. So that's Coinbase. Finally, we mentioned that there was news that that Cannabis is coming off Schedule 1, and those stocks went crazy. So let me just scroll down there. I'm looking, there it is. Look at this. CGC is up 66% today. Holy cow. Okay, 66%. I have options on in that one. I bought it as soon as I saw the news. So let's go over to CGC. This thing is just going crazy. So if we go down to, even just down to the 15-minute chart, this thing is just absolutely ripping. So we traded up to 1427. Oh, man. Active trader, CGC. All right, well, I'm up $3,800 on that. Looks like while I was talking, we're 70 cents higher. So I need to do a little bit of Elliott wave work on this, but you know, that is looking quite solid. Now, I just am a little concerned. Is this 4 against this 2? I'm not sure. I don't think that it'd be a little hasty to do that, but we want to watch the longer term retracement, and the 786 is what we really want to focus on up there at 19. And I think one thing, you know, going back to that, there's one thing I did forget to talk about in Coinbase that I want to mention is that specifically that 786. But just to be complete, you know, here's the options. I'm holding some May 10 calls. I had 20. I took profit on a quarter of them, and I still have 15. Back to that Coinbase. One of the important points I forgot to mention there is if you get off the daily down to the weekly, up to the weekly, we are not through the 786 retracement. And the 786 is just so important, right? The scene of so many tragic reversals and crashes is right there. And basically what it is like, if, come here, let me redraw you. If you get a stop run through the 61% retracement, which is highly visible, everybody knows that right there. If you get a stop run through 618, usually by the time they're done running stops, it's into the 786. Or if it is actually uncovering some natural order to the market via Pythagorean theorem, square roots, that's a much deeper conversation, but pretty good level to mention. And the fact that we're coming back below it is really important. Any stock that I think is confirmed uptrend has broken the 786 retracement of the 22 or 21 high. Okay, so that's really important. And then, as I mentioned on the wave count, we have a potential wave 4 down. So, there's a lot going on, guys. I hope that helps. And I wish you luck. Let me just find my screen here. Yeah, I wish you luck. Check us out, tradinganalysis.com. We have a brand new members area. Julius de Kempenaar joined the team. He's putting out some free content for us, doing relative rotation, game changer for widespread analysis of looking for good stock setups within the groups that are in play or falling out of play, as I mentioned on the rotation. So lots of good things going on. So, all right, we'll leave it there. Have a good one and talk to you all soon.